All right, everybody, what's up? This is Aaron D. Thanks for checking out this basics tutorial. All right, basics tutorial on day trading. All right, day trading. What is day trading? Day trading means that you are going to use your resource, your funds, to invest as a leveraged trader. Okay, so there's a couple of different ways that people invest. Some people buy stocks. They buy Apple stock, they buy Microsoft stock, and they watch over time how their stock value will go up and down. And that will determine whether or not they profit or lose, right? So if they buy Apple stock, for example, Apple or Tesla or whatever, right? So I'm gonna go to Apple real quick so you can see what Apple stock actually looks like on this chart. So this is what Apple stock looks like today. Today it ran up, but if y'all saw the news, you saw that Google, where is Google? What's it called? It's called Alphabet. Yeah, that's right. Watch how fast Google, man. Google tanked like a mug. That's why the NASDAQ dropped. So anyway, people will buy their stock and they'll make money whether the company makes money or not. People know that. You buy low, you sell high, right? In day trading, it doesn't matter if the stock goes low or high, you're going to get into a position where you can leverage either way, either direction. So in this case, what we're looking at is the NASDAQ 100, the top 100 companies. You can't see that because they're too small, but there's top 100 companies that make up the NASDAQ. And that's what we look at in the market and trade. Instead of going to buy stock in 100 different companies, we just enter a position as a buyer or a seller, and whether price goes up or down, we will enter and actually use our capital to leverage. So what we do is called leverage trading. Okay, leverage trading. That means that I'm going to leverage my capital in a position where the price goes up or down. And you can see yesterday we went up and down, and then overnight we consolidated, and then today we just sank all the way down, and now we're going sideways. All right, so that's kind of the overview of what day trading, leverage trading is in comparison to what stock trading is. You're going to buy a stock and hold it, and if the value of the company goes up and down, you lose money or gain money. Leverage trading means it don't matter if it goes up or down, I can enter it in a position and still be profitable, depending on a few things. All right, so that's kind of that. All right, this website, please take down this website. All right, take down this website. This website is called TradingView, tradingview.com. It's the visual that we use, day traders, that we use to see how price is moving in the market. And now off to the side, you'll see here off to the side that there is price right on the right side of this screen. So this is going to be very important in your trading. You want to get on this website and you want to look at NASDAQ, right? So you click over here, and up here there's NAS 100. Okay, and that's what we're going to look at. That's called an instrument. That's called a symbol. That's called, sometimes they call them pairs, or they call them items. It's all the same things, or they call them stocks or cryptos. It's all the same thing. We just call it a symbol. Is DAC, all right? And TradingView is what we're going to use to look at this thing. All right, and I'm gonna try to go fast through it, and if you need to go back, just go back and rewind this deal so you can watch it over and over and over again. That's the beauty of technology. All right, so now once I understand that what's actually going on this chart, these little bars, these bars are called candles. Okay, So every candle is either going down, represented in red, or it's going up, represented in green. And this one that's moving right now is actually happening right now in real time. And at the bottom, you can see the date. So the date is February 8th, Wednesday, and the time is 2 o'clock, and they use military time, 1400 hours. All right. So that's what each one of these bars represents, time and price. Okay. Time and price. At the bottom is time. Over here out the side is price. Your job is to react to this market. Okay. If price is going down like it did today, when it opened at the New York Stock Exchange opened Eastern time, it's 9:30. Central time, it's 8:30. All right. Pacific time, I think it's 7:30. So as the New York Stock Exchange opened, you see that it opened, and I can replay this, go back in time and replay this, and it'll show you the first 30 minutes of what happened. And this bar or this candle, it has two components. I'm gonna give it to you real quick. The first component is this middle part. That's called the body, okay? The body. Ooh, I've never wrote or spelled with a mouse. All right. And the second part of it is called a wick, and that's the skinny line, right? So you got the body and you got the wick, all right? So the body is what price is telling you what direction it's moving. If it's green body, it's going up. If it's a red body, it's going down. And these colors can change. So right now I have them set to red and green. Yeah, thanks for joining, man. We're just kind of going over, and I'm recording it so we can reference back. Thanks for checking it out, brother. All right, so they got the body. That's this thick line, and then you got the wick. That's the skinny line. So what that means is, as price went on this candle here, let me go one more candle away. All right, let's see here. Bang. All right, so now you got a bigger body here, and you got a wick. What does that mean? That means that price first went up, and then it came down and left a wick. Okay. And then it continued down and started to form a body, and went further down and reached this level here and started to come back up and left this wick. And by the end of this candle, this 30-minute candle, it took 30 minutes for this to print. So you're going to wait here, watch this for 30 minutes, but I'll show you a different way to look at it as well. It took 30 minutes for this to print. And so this is telling me a story that it opened here, went up, left a wick, came down, it grew a body, went further down, started to go up in price, and by the end of it, it left this body. That tells me that's when it closed, right? So you have this open here, here's the high here, here's the low here, and here's the close. So you have open, high, low, close. These are the different parts of the bar or of the candle. And so what that tells me is a couple different things. It tells me that if I look back in time, each one of these represents 30 minutes. Well, here's 30, hour 30, 2 hours, so on and so forth. How long has it been going down? Well, since 6:30 a.m. And so how likely is it that it will continue down? See, this is where you need to use critical thinking. All right. Because we don't know, and there's no way that you can ever predict. Our job is not to know. Our job is not to predict. Our job is to react. React. Just react. This morning, I didn't know whether the price was going to come down and then go all the way back up. We don't know. All I needed to do was react to it. So that's kind of fundamental. You're just reacting. It's almost like in music, it's impromptu. You know what I mean? You you just find the flow and then jump in the flow. Well, if you look at this, what's the flow? From here, we've been steady coming down, right? If you look at that, if you look at that line right there, this is a trend line. Um, if you look here, it's kind of doing this, right? So that tells me that the flow from midnight, right, from midnight till right here has been going down. And it's important to be able to identify what the flow is. All right. So that's three things right there already, guys. That's what are we using to even look at the market? That's this Trading View. That's this website that I'm on right now, and it's free. So you can go to tradingview.com on your laptop, or you can go to the App Store or Play Store and download Trading View. Trading View is going to be what we use to actually look at what each market is doing. And right now we're looking at the NASDAQ 100. You've heard of the NASDAQ 100. But there's also, like I said, the Dow Jones 30. That's what this is. And let me get rid of some of all this drawing. See, this is art, man. This is art because you come to the chart and you mark up, you do all these markups. I mean, and you just find the flow and jump into the flow. All right, so let me continue and I'll show you a couple other things. And if you have any questions, man, just jump in and say, hey, I got a question. All right, because I'm just going to flow. Let me get rid of that. So now I'm going to rewind, go back in time. On Trading View, I can go back to like 7 a.m. So I'm going to go to 7 a.m. And it moves those candles. It moves the entire chart in back in time to before 7 a.m. This is what it looked like. Okay. Now up here at the very top, there is a 1M, 2M, 4M, 5M, 15, 30, 1H, 4H, a D, W, and M. Each one of those represents the time frames, right? So right now I'm on 30. See where it says NASDAQ 130? That's because each one of these bars is 30-minute bars, 30-minute candles. But if I change it to 4 hour, now I'm looking at the same information in a higher time frame. Now it takes 4 hours for each one of these candles to start and stop and end, right? So if I look at this, this is the 4 hour. If I go to the D, that's the daily, right? So it's the same information. It just puts all of those bars in one bar, and it gives me an opportunity to actually take a big zoom out. What has this stock been doing, right? And you want to have a good overview of what the stock or what the symbol, whatever it is that you're trading or looking at, what has it been doing historically, right? So on a higher time frame, in this case, the daily, what have we been doing? Dude, we've been going up. Dude, we've been going up. Look at this flow, right? We've been going steady up, right? Steady up from, when is that? From January, from the beginning of the year, we've just been going steady up. Well, what's interesting is that when you go down to the lower time frames, like 1 hour, right? So that day candle just exploded into 24 candles. Why? Because there's 24 hours in the day, right? So now these 24 hours represent a whole day, or 24 bars represent one day. So that's kind of the magic of Trading View, is that you can see that kind of information all the way down to the 1 minute. Now, dude, I'm trying to tell you, this is crazy. So you have all these candles, okay, all these candles that make up the whole day. Let's see if I can even fit the whole day in here. Yeah. So here's the whole day from the 8th, from midnight last night to where we are currently. And so you can have these big overviews, right? So from the daily, we saw that we were going up. On the daily, we're up. On the 4 hour, we were kind of headed in the sideways direction. on 30-minute, we just we decided, well, we're kind of from midnight, we're going down. So you could be going down in the market on the lower time frames, but keeping in mind on the higher time frames, you're going up. All right, so that's just one way to try to understand what day trading is. Day trading is basically not really worried too much about what's happened in the past. I am keeping it into consideration. I'm more concerned about what's happening right now. And if you can identify what's happening right now, then you can enter in a position and leverage the market and then extract some gains from that. So how I would approach and what we do is we just teach simple rules. Because without rules, you're gonna be like, oh, there's a red bar, I better sell. No, dude, that's not it. That's not what it is. You want to first identify what the flow is, right? You want to identify what is the flow of this market right now? And the market I'm looking at, the symbol I'm looking at is the NASDAQ 100. Okay. So I'll go through this one time and then I'll stop for some questions. And I'll tell you how today we made 7% on our entry. I mean, dude, 7% in like not that much time. There's people who hold stocks for years who don't make 7%. We made this today. Okay. 7% on $100,000 account is $7,000. So on and so forth. It's all relative. The dollar amount doesn't matter. What matters is that you're able to identify and react. That is the key. If you can identify, I'm gonna write that down. Identify and react. That's it. That's all you need to get really good at is identify which way is price been, where it is now, and where it could potentially go. All right. And so once I've identified, then I have to have reasons to react. Okay. You just don't react because there's a green bar going up. Like, oh, it's a green bar. I better buy. Right. And so here's one of the ideas you want to keep in mind. When price is going down, right? Let me explain this real quick before we continue. When price is going down, what you want to do is you want to sell, right? They say buy low, sell high, right? Well, if I hit a sell right here, everybody understands that you sell this. Typically, you sell the stock, you're out of the stock, and you've made your money. That's where you sold, and that's it. But in day trading, once you click sell, you are engaged in that market. And if that market continues to go down, you continue to be profitable all the way down as a seller. And you're just catching all these pennies going down. I know that's new concept for a lot of folks, but in day trading, that's just how it is. If price is going down and you click sell up here and price does go in that direction and you get out right here, you've just made some money, right? And the same is true for going up. If price is going up like it does here, just this real quick this move right here, and you get a buy position in your account, then as price goes up and you get out here, you make money, right? And if you're a ninja entry, man, if you can identify and react and you click sell over here and price goes down and you get out right here, you just made some more money. So this is the concept that everyone is trying to understand. How do you make money when price is going up and down like that? And that's the magic of day trading. And that's why I spent the last 24 months trying to figure this out. When I saw that you could profit no matter what in the kind of time frame that most people don't see that kind of gains within years sometimes, I was like, yo, we're figuring this out. So identify, react, right? When price is going down, you want to be in a sell. When price is going up, you want to be in a buy. So if I were to look at yesterday real quick, I wanted to be in a buy as price went up in this direction, and I wanted to get out of that buy, right? and cash, or at least get out of the position and take that profit. And then I wanted to jump into a sell, right? As price made this large dive down into the lower price range. And these bars represent huge amounts of sellers in the market. They started to sell, right? And so if I clicked the sell button here and I got out here, then I would have leveraged my capital in both directions in both days. I mean, in the same day, right? So there's money to be made whether the market goes up or down. Now, here's the deal. And if you're taking notes, write this down. If price is going up, you're going to buy, right? When price goes up, you buy. You got to understand this. When price goes down, what do? Sell. Now, there's one more direction. Now, price is always going to go up and down. But if you pay close attention, you'll see that even though these candles, even though these bars are going up and down, they really don't go higher than this level here, and they really don't go lower than this level here. So what they've done, what price has done, it just stayed in this range. And so when price is going in a range direction, when it's going sideways, all you do is wait. All you do is wait when price is going sideways. So let's recap. When price is going up, easy. We better be in a buy. When price is going down, we better be in a sell. When price is going sideways, wait. While we wait, we educate, hydrate. All right. So let's keep going. Let's get to the example. And again, you can always rewind this video, go back and watch this video. I'm gonna keep this up here because that's really important. And then get some questions ready if you have them. I'm gonna walk through the example and then we'll open it up for questions. Here it goes. All right, so I'm gonna go forward in time. Now I can go forward on TradingView. I can go backwards and forwards in time and replay and repaint these candles. All right, so we know that red candles means they're going down. Green candles means it's going up. Okay. All right. So what I want to do is I want to see from a higher time frame. This is all the magic right here, man. This is all the magic. I want to see where price has been the highest. Okay, since yesterday. So yesterday's high. All I got to do is look down at the bottom of the screen. And it tells me there's Tuesday, right? And Tuesday never really went higher than that level right there. And it left a pretty large wick right there. So what I need to do is I needed to be able to look at that. I need to be able to identify. This is part of the identifying stage. Right now I'm identifying the high point that price went, and when did sellers enter the market? That means the wick represents when price went up and you leave a wick, that means that price and the buyers came into the market. And as it left this wick, that means that sellers came and pushed it all the way back down. So the larger the wick, the more sellers. And pay attention to what happened since yesterday's high and that wick zone. So we'll call this a wick zone. Right? And I just shaded it in and extended it to the right so you can see this range. Price exits that range and then it comes back into that range. And what does it do? It immediately rushes out. All right, this is important because what happens again? It comes back in and then it comes back out. So how high of a probability would it be if price were to come back into that gray range that we drew, that wick zone? How high of a probability would it be that it goes down? I think it's going to be a pretty high probability. See, it's not hard. It's not hard. You just gotta pay attention, right? So if it comes into this area again, and I identify that it's a good opportunity to sell, then I'm anticipating It's okay to anticipate. I'm anticipating price coming back down into the lower market, and somewhere in here, get out and get that cash. Get up out of there. Get out of there. That's the idea. And so every day you want to be able to see. What I just did was identified. I identified what price did since yesterday's high, okay, and where we are today, actually at 7 a.m. What else? So that's where I would be looking to see if price goes up for it to come down. Now, if price goes up, that's what I would be looking for. If price comes down, where do I want to see price come to? Well, here is a level right here where price is going sideways. And what do we do when price is going sideways? Wait. So price came sideways into this level here down and never really went lower than this wick fill here. And when price goes down and leaves a wick on the bottom, that means that sellers were in the market. And then the buyers came up and pushed price up and it left a wick. Now, with all that information, we need to be able to derive, we need to be able to decide what could we potentially do, understanding these two zones. And this is all it is, man. This is as easy as I can explain it, right? And the more you watch it, the more that you'll understand it. And the more you hear about it, the more it'll make sense. All right. So right here, this green candle right here is 705. All right. So what I'm going to do is I'm going to wait because we're going sideways. I'm going to wait for two things. Number one, I'm going to wait for price to either come up into this area and drop, right? And enter somewhere here. Okay. Or I'm going to wait for price to come down out of this range and I'm going to enter here both on a sell, right? And if price wants to go high, I'm going to look for it to come up out of this range for a buy. That's it. That's all you got to do. If you can identify that way every day and jump in and jump out and get your bread, you're going to be straight. Okay, so now let's kind of replay the candles now that we have an idea of what potentially could happen. Okay, so here is 705. Okay, and I'm gonna play these kind of quick so we can get going. Here is 730, and so price is on a 5-minute time frame. So each one of these bars is taking 5 minutes to print, right? So you're actually sitting here. For each one of these candles to print takes 5 minutes. Okay, so we'll continue to watch. All right, there's one more candle, and I'm going to click through them pretty fast, but just keep in mind, the majority of the time we're looking at this chart, we're watching one candle just kind of go up and down in the same candle. And we're like, this is crazy. All right, so pay attention. Right here, we see a breakout. We see it break out beneath this level here. And so what most people will do is they'll be like, oh, price already broke out. I'm going to go ahead and buy. Okay. And what I just put on the screen is something that represents when we enter. All right. And this red part is how much I'm going to be willing to risk of my capital. And this green part is going to be what I'm anticipating to gain. So here's risk, here's gain. Okay. The anatomy of this is the only thing I know about this is what I'm willing to risk. This is the unknown part, this red part, that's known. This is something that I know, well, what I'm risking. Now, this part, I don't know. And it could come down a little bit and then go all the way back up. All I know is I'm going to be risking a predetermined amount of my capital, okay? A predetermined. And that's going to be an easy 1%. So if I have $100,000, 1% of that is going to be $1,000, okay? And it's relative for the account size, all right? This part here, the bottom part, I'm just going to target I'm going to target. And see, that's the thing. You got to target. I'm going to target where has price been historically, right? So I know that yesterday had a low right here at noon. I could potentially target that low. I don't know. We have to find out. See, that's the beauty of day trading. You don't know what the gains are going to be. The only thing you know is what are you willing to risk? And so we're willing to risk 1% of our total account per trade. That is a rule that you cannot break or you're going to get toast. Okay? So as I'm going through this example, you'll see that this is probably not the best entry, right? Why? Because remember, I was looking for this thing to come up here first and then down. So this may be a little premature, but we don't know. All right, so then we're going to go to 8 o'clock. All right, so it kind of stayed right there in that same little situation right there. It never came down. So I'm like, man, this thing going to go up. Sure enough, it pops down just a little bit. I call it a fake out. And what's amazing is that market movers, banks, hedge funds, capital resource management agencies, they have the $1 billion that will move the market in a second. So they know that if they just dropped it a little bit, people like me or like us, we're going to click sell and we're going to put our little risk up here. And so all they got to do is trick me to get in and then take the price back up. And then I'm out. So that's why I say you got to have a few more things involved to give you confidence, or what we call confluence, to enter and to risk your own money. All right, so here's 8:30. 8:30 is when the New York Stock Exchange opens. And when the New York Stock Exchange opens, that's when the machine actually turns on, right? When the machine turns on, the stock exchange machine. That's when people start to buy, sell. You see them on the trading floor, this, that, and the other, right? They're going nuts over there. And we see that in this one bar. All right. And so if you look at this bar, let me get rid of this guy because that's just something that you just got to pay attention to. When you look at this bar, you see that there's two wicks to the top, or there's two wicks, one to the top and one to the bottom. That tells me it don't know which way it wants to go because it's still in the middle. So we just wait. Okay, now we see price give us a pretty decent green bar going up. This is what our initial idea was supposed to look like. Remember, we were thinking up and then down. So let's pay attention and we'll see what happens. And the hard part for most people is when they see that thing moving, they're like, oh, it's going up. It's going up. I need to get in right here. I need to get in right here. Well, price could just be trying to trick you to get in right there and then go back down. So you have to deploy the most ridiculous amount of patience when you're trading. All right, so price goes up and look at that. Gives us a pretty decent bull candle, red candle, bear candle. All right, and then it just completely drops. All right, so here's how we would know when to get in, right? Because we know we're looking for sales. We were thinking it'd come up here, but it didn't actually come up there. So what we would need to do is have different tools. And this is where our tools, they really shine, right? Our tools shine right here. One of them is it's like a line that follows price. It's a little blue and red line. I'm just giving y'all all the stuff, man, so y'all can go back and watch. And once I see that price has come down and that line flipped from blue to red, I know that is part of my rule to enter. And I can enter risking a predetermined amount, targeting a price that was historically touched. So something like this. And so today, this is what it looked like as we go forward in time. All right, price comes up, taps our risk, and then goes down. So this first one, if we risk 1%, we're down 1%. But then it gives us another entry where that line went red. Pay attention, because this is where it's about to get good. All right. So we're still thinking that price is going to make a move down because there's no reason for it to go up yet. But we're going to pay attention. So that next candle right there, that tells us, dude, you picked the right side. But for how long? Now, because it could come down here halfway and turn around. So there are a couple of different rules that you got to have. I'm telling you, this whole thing is based on rules. This is why I say, man, if you can't follow directions, this is probably not for you. If you can't make certain restrictions for yourself, then you probably not going to do you're not going to do well in this deal. But if you can make restrictions for yourself, then you're going to be okay. So once it hits something like this risk line that's up here, we're going to move that in profit. And we're going to take this line that was up here, right? That if price wanted to go higher, it would stop from taking all our money. It'd be a predetermined risk. We're going to put our predetermined risk now in profit. If you go on YouTube page, man, you can check out today's trade. And I do this. I record it live to Zoom, and then I put it on YouTube so people can watch how I manage being in a trade and just how I'm just chilling. Most people are like, yeah, go, man, yeah, go. I'm drinking coffee, chilling. But I put the protection line in profit. So if the price does come up, it's gonna take me out, and I'm gonna leave that day with some bread. Okay, so as I'm protected, I'm gonna watch price print even further, and I'm gonna see it go sideways. Then it's gonna start to trickle down again. Go sideways, trickle down again. Here comes 11 o'clock right here. And this is where it seems like price has exhausted itself. All right. What price could potentially do is just now go sideways for the rest of the day. All right. So from that point here, we did 3% right there. So I'll just play it all the way out. This is what the whole day looked like. So we were right on this first initial sell, and our predetermined risk just barely got tapped, right? We lost that 1%, but then we gained 3. Dude, that's it right there. So my actual entry for today was here. And it was here based on a couple of different things that I look at and that I'm going to share with you all as we continue. But we were looking at more like 11%, and I actually got out right here at 7%. So, man, it was a crazy day. All right, so that's all I'm gonna go over, man, for the basics of this deal. I touched a lot. There's still a lot to it. There's so many more resources out there on YouTube. So yeah, rewind this tape, and if you have any questions, let me know. Thanks.